Let's continue the regions. Before I jump to the next region, let me explain about some bill of exchange, how it works. Suppose we sell the goods for 1700 to the customer. He should pay us cash or he should give us check. But instead of giving us cash or check, the customer gives us a promise in writing that he will pay us 1700 after 3 months. And that written promise is called bill of exchange. So naturally, before the completion of 3 months, we can't claim money. If we need money, we can discount the bill of exchange with the bank. Different banks charge different commission. I mean to say discounting charges. Suppose we discount the bill of exchange with 1600 with the bank. It means we took the bill of exchange, that written promise, to the bank, and bank took the delivery of that bill of exchange and immediately paid 1600 in our account. So in this way, the bank has earned 100 rupees as discounting charges. After 3 months, our bank will contact our customers to collect the money. If on due date, bank collects the money, then the things are okay. But in case our customer refuses to pay money against the bill of exchange on due date, that bill will be treated as dishonored, and immediately bank will recover that 1700 from our account. This is the system of bill of exchange. So let's jump to the next region. Why there is difference between cash book and passbook. Suppose bill discounted but dishonored rupees 1700. It means we received a bill of 1700 some months ago, and this bill was discounted with the bank and it was dishonored today. You know, if the bill is dishonored, the bank will recover money from our account immediately. So let's have a look how the cash book was looking like. Opening balance 8000 and the closing balance is still 8000. But in passbook, opening balance 8000, to bill of exchange dishonored 1700 on minus side, and the closing balance is plus 6300. This is the reason of difference. Sometimes some errors are made by the firm. For example, check issued for rupees 1800 to supplier but recorded by the accountant as 180. It means this was the error of our accountant of the firm. But there is one more technical thing. If the accountant makes this type of error, the trial balance cannot match. So we are assuming that there was difference in the trial balance. Anyhow, instead of discussing about the trial balance, let's have a look how the cash book was looking like and how the passbook was looking. In the cash book, opening balance 8000, by check issued to party 180, closing balance, I mean to say by balance CD 7820. But in passbook, opening balance 8000, to check paid 1800 on minus side, and the closing balance is 6200. So in this way you can see that there is difference of this amount due to mistake made by our accountant of the firm. Let's have a look at another reason, and this was the error or mistake by the accountant of the firm. The mistakes I am talking about made by the accountant, it also brings the difference in the trial balance. Suppose the check of 1900 was issued to creditor but omitted to be recorded. It means the check was issued but accountant forgot to note down. How the cash book was looking like? Opening balance 8000, closing balance 8000. But the passbook was opening balance 8000, to check paid 1900 on minus side, means debit side, and the closing balance is plus 7100. So this difference was the check was omitted to be recorded in the cash book. Let me remind you, if the accountant makes this type of error, the trial balance will mismatch or disagree. Generally, if there is any disagreement in the trial balance, suspense account is placed to balance the trial balance, and later on when they find the error, the suspense account can be adjusted. Another reason, check of 1000 was paid into bank but recorded as 100 by the firm. It means this was the error or mistake by the accountant. Check of 1000 was paid into bank means we received a check from some party and immediately deposited in the bank, but it was recorded as 100 in the books, means in the cash book. How cash book was looking like? Opening balance 8000, to check deposited 100, closing balance 8100, and passbook was looking as opening balance 8000, by check deposit 1000, closing balance plus 9000. Please be careful. Whenever we prepare bank reconciliation statement, three things are placed before the accountant. Number one, cash book. Number two, passbook. And number three, bank reconciliation statement. And let me explain you some new terms familiar previously. You might find the word advice given by bank. In the accounting, advice means the business information given by the one party to another party. Another reason, check of 1000 was deposited into bank but omitted to be recorded by the accountant of the firm. It means we received a check of 1000 and the check was immediately deposited into the bank, but the accountant forgot to note down. It means the cash book was looking like opening balance 8000 and closing balance 8000, but passbook was showing opening balance plus 8000 and by check paid or realized plus 1000 and the balance is plus 1000. This can be the reason of difference, and this was due to mistake of accountant of the firm. And check was issued to creditor but omitted to be recorded by bank. It means we issued a check to our party for 1900 and this 1900 was paid by the bank, but bank forgot to note down this transaction in their ledger. That's why this entry is missing from the passbook. It means this was the mistake by bank. So how cash book was looking? Opening balance 8000, by creditor 1900, by balance sheet is 6100, and passbook was looking like opening balance 8000 and closing balance is still 8000. This was due to mistake made by bank. Next, check of 1000 was paid into bank but recorded as 100 by the bank. It means this was the mistake by bank. The cash book was showing opening balance 8000, to party 1000. It means we received a check, we immediately noted down in our cash book on debit side, receipt side in the bank column, and the closing balance was 9000. But passbook was showing opening balance 8000, by check deposited 100 and the balance was 8100. This was all due to mistake of bank. Check of 1000 was deposited into bank but omitted to be recorded by bank. Means we received a check from the party for 1000 and we deposited the check immediately in the bank, but bank forgot to note down in their ledger. So how the cash book was looking like? Opening balance 8000, to check deposited 1000, by closing balance 9000, but passbook was showing opening balance 8000 and the closing balance is still 8000.